Let's talk some options, some volatility information, and some volumes as well. Kevin Green taking a look under the hood for the market here. I know you want to talk some volumes first, KG, so let's go there. Are we getting some action? Are people participating at all-time highs?
There is a little bit of action earlier in the session here. Now, we do have pre-market trading for the S&P 500 options here, and it's very minimal, but when you kind of look at the skew, it's definitely on the put side. So a little bit more protective placement when it comes to the market right now here, Oliver, to start off the session. And you can kind of complement that with some of the leading sectors so far, which have been defensive as well as interest rate sensitive, as you kind of just talked about. You're talking about consumer staples, financials, utilities kind of leading the way, as tech is kind of a little bit behind for now. Let's see if that's going to actually change here in the next couple of hours. But for the levels for today's session here, 58.90 is going to be your area of resistance. That's where we see a lot of that concentration, a lot of call selling happening there. Those collar positions for those institutions, they're pretty much layering in at that level. And then we did see, once again, some put buying taking place at the 58.20-ish area as well. 58.30 is also seeing a little bit of flow. So those are going to be the ranges for right now. Now, this is what I will say here. You know, volatility is still coming down here on a marginal basis, but if we see the same type of sector makeup like we are seeing right now, I would probably expect a little bit more of a consolidated type of day. The liquidity in the market actually is very healthy. I mean, you're looking at on the average 50 contracts on the bid and ask on average for the E-mini S&P 500. We haven't seen that all month, so liquidity is definitely there. The optimism for the market is definitely there, but I would not be surprised if we do see maybe a little bit of a consolidation phase for the next couple of sessions until we actually get that retail sales report to either try to push us higher or push us lower. It would be nice to continue this move to the upside here. But once again, I see a little bit more elevated put flows this morning than what we've seen over, let's say, the last 4 to 5 trading sessions for right now.
Okay. Seems like we're breaking free generally from level after level, forming support essentially on the way up, kind of a stair-step pattern. So is there anything in the flows signaling big players betting against this, or is it kind of forcing market participants to position generally for further upside?
Well, when you're looking at overall for the open interest, not only just including today's expiration, but all the way out to the curve here, we are still seeing a rolling up and rolling out of positioning, especially on the call side. So it did move up that positive dealer gamma level, sitting at 5,900. What does that mean? That just means that there's a lot of call selling right there, and that could be an area of resistance. Now, as you kind of talked about, we've been kind of going through these areas of resistance, resetting and continuing to move forward. That's exactly what you would want to see in a bull market type of scenario like we are seeing right now. The negative gamma level still sitting at around 57.45. I have not adjusted that yet. We haven't had a meaningful pullback to really see the massive adjustment or any type of massive adjustment when it comes to institutional positioning there. And then 5,800 just psychologically is going to be a key area. That's going to be that area of the support line that has now turned into support that was resistance on that rising wedge pattern, which is ultimately bullish. So I would still say when you're looking across the curve, still overall bullish, but for today, in today's session, I would just be a little bit more cautious when it comes to that optimism for now. We might get, once again, one of these inside type of days, compression, where we do see selling at these resistance zones and then buying actually happening at these support areas that we've highlighted on that volume chart.
All right. Seems like good stuff. I mean, pretty much across the board for the most part. The participation breadth, I know you're monitoring also. Different ways to gauge breadth. We've been talking advanced decline, which picked up. This morning, you're looking at percent of stocks above their moving averages. Which average, KG?
Yeah, looking at the 100-day moving average here, Oliver, we're sitting at around 81% of stocks in the S&P 500 above that average. Now, you could say that is a little bit stretched, but if you kind of look back between December and April, we actually were able to stay at these elevated levels for a very long time. So this doesn't mean that the market's going to immediately correct to the downside here, but it is something to kind of keep on watch. I don't have this chart, but if you're kind of looking at the 200-day moving average, still at a rising level. It's not at the extreme of 80 to 81% yet, but once you get to that 200-day moving average, or those percent stocks above that 200-day hitting that 80% level or above, that's where you would get a little bit cautious that maybe we have a minor pullback. But the 100-day, I think, is the right and perfect gauge right now between that 50-day, which is definitely stretched, and then that 200-day, which is more of a lagging indicator, to say the least. This gives us a little bit of perspective as to how many stocks are participating, where we are at in this market, and if this is kind of that refresh cycle that we see seen from those October lows. I mean, and we have that same type of stretch of 4 months, 5 months above the 100-day, and we're sitting at around 78 to 80%. I mean, we can push higher here. This is just something that I would just put the yellow light on, if you will, to just know that we are a little bit stretched when you're starting to look at a lot of these longer term moving averages.
All right, that's interesting that we're pretty much back to the level of participation that we couldn't quite get through earlier this year. So, I mean, I guess, when you get saturated, then maybe you're saturated, but perhaps then that's where we'll see the other stuff pick up. People have been dabbling in cryptos again, and maybe we'll see some of the risk on start to build. Maybe the Russell gets in the mix, the small caps, like the perspective. Thanks, KG.